August, and federal regulators have taken control.
Try and thin any sort of contagion effect.
Impacting tech startups, leaving customers in limbo.
Raising concerns about the broader economy.
If we hadn't been driving our economy with easy money and then trying to really quickly undo that, we wouldn't be having these problems now.
Americans can rest assured that our banking system is safe.
This is the story they don't want you to hear. What if the US dollar, the bedrock of global finance, is on the verge of collapse?
The strength of a nation's currency is based on the strength of that nation's economy. And the American economy is by far the strongest in the world.
And what if Wall Street, who once called crypto a fraud, is now secretly scrambling for one specific asset? The truth is, while you weren't looking, Ripple's network and its partners quietly moved billions of dollars last quarter, proving its true scale and efficiency. Just recently, a US court handed down a landmark ruling that gave XRP the green light. This isn't just about crypto. This is about the future of global money. This is the definitive case for why XRP is positioned by design as the world's new money. Ruling. The Federal Reserve has tried to respond with its own upgrade, a system called FedNow, but it has a critical design flaw. It is not built on a blockchain and does not work across borders. Simultaneously, the Fed is researching a digital dollar, or CBDC. But this is a massive and slow-moving project, facing huge political and technical hurdles. Other existing crypto solutions like Bitcoin or Ethereum also face issues with high fees and slow transaction speeds for everyday payments. The ideal solution would be a ledger that finalizes transactions in seconds with a cost of a fraction of a cent, with predictable costs and no network congestion. Now let's turn our attention to the new money. XRP was meticulously built for one singular job: to act as a bridge to send value at low cost and instantly. Let's look at a real-world scenario. The old way involves a traditional bank wire transfer that takes 3 to 5 business days, with fees as high as 4%. Now, imagine the new way. Using Ripple's on-demand liquidity ODL, powered by the XRP digital asset, that same payment is settled in an astonishing under 5 seconds. The cost? A tiny fraction of a cent. For the multi-trillion-dollar global remittance market, this efficiency is a complete game changer. These aren't just theoretical applications. ODL uses XRP as a neutral asset. A company can swap Japanese yen for XRP, send the XRP across the world, and swap it into Mexican pesos on the other side, all in a matter of seconds. And speaking of market leadership, I want to introduce UNICH. This platform is the first OTC platform with built-in staking and lending for pre-TGE tokens. It boasts over 5 million users and a total trading volume of over $1 billion. What's more, it has a doxed team legally registered in Lithuania, with top-tier partners like EnSoFi, Scrypt Network, and Kima. This isn't just about early access. It's about participating in the next wave of innovation with a strategic edge. Investing in pre-TGE tokens carries significant risks, including potential loss of capital. This is not financial advice. To learn more and participate in their IDO, click the IDO link in the bio. For years, a formidable barrier stood between XRP and its widespread institutional adoption: regulatory uncertainty. That changed in August 2025. A federal court ruled that XRP itself is not a security when you and I buy and sell it. This legal clarity was the green light that big financial institutions were waiting for. In just days, you saw major players like Grayscale and Bitwise swiftly file for XRP ETFs. At the same time, XRP futures contracts on the Chicago Mercantile Exchange, CME, surpassed $1 billion in open interest, the fastest contract in the exchange's history to reach that milestone. An approved ETF would mean XRP could be held in your 401k or IRA. This clarity also gives a roadmap to foreign central banks. The top regulator in Japan authorizing yen-backed stablecoins on the XRP ledger is a perfect example. It allows a digital yen to move at the speed of XRP, essentially creating a central bank digital currency, CBDC, that runs on the same tracks as a neutral bridge asset. This isn't just theoretical. The government of Palau is currently piloting a digital dollar using the XRP ledger. Recently, Gemini launched its XRP MasterCard, which allows users to spend anywhere MasterCard is accepted. A startup named Zeno has developed a groundbreaking point-of-sale terminal that accepts XRP directly, with a fixed 30-cent settlement fee, eliminating percentages and minimums. Beyond these examples, more than 300 financial institutions are already on the RippleNet. This is the foundation of a new financial infrastructure being built right under our noses. But wait, how can a stablecoin backed by the US dollar, like Ripple's RLUSD, help replace the traditional role of the dollar? It sounds like a contradiction, but it's a classic Trojan horse strategy. The key is not the stablecoin's peg to the dollar, but the rails, the underlying technology that it runs on. RLUSD lives and breathes on the XRP ledger. Once the global financial plumbing is rebuilt on the XRP ledger to handle RLUSD, switching from a dollar-backed token to the network's native neutral asset, XRP, will be as simple as flipping a switch. The stablecoin builds the superhighway. XRP is the supercar it was designed for. Here is a critical piece of the puzzle: the economics of the XRP ledger. The total supply of XRP is hard-capped and fixed forever at 100 billion tokens. When more institutions join the network, the demand for this working capital goes up, but the supply stays fixed. Furthermore, every transaction executed on the XRP ledger permanently burns a tiny fraction of XRP. This creates a slow, constant deflationary pressure. The system that keeps the dollar on top was designed after World War II. The fastest growing economies in Asia and the Middle East are actively building financial systems so they don't have to depend on a single country's currency. China banned crypto trading, but embraced the underlying technology, signaling they want payment rails that aren't painted American. The moment a major trade corridor, like oil sales from Dubai to Tokyo, starts settling in a neutral asset like XRP, the dominoes will truly start to fall. And as the demand for these innovative financial solutions grows, so does the need for platforms that empower users to participate from the ground up. UNICH is one of those projects. It is built to bridge the gap between early-stage innovation and accessible investment, offering unique opportunities to engage with emerging projects before they hit mainstream exchanges. It is targeting a low FDV of just $150 million, fully diluted valuation at TGE, making it a highly attractive investment opportunity for those seeking early exposure. Investing in pre-TGE tokens carries significant risks, including potential loss of capital. This is not financial advice. Please do your own research before investing. With its strategic positioning and a focus on transparency and community, UNICH aims to redefine how early-stage crypto projects are launched and supported. Don't miss out on this potential opportunity. Find the UNICH IDO link in the description below to learn more and get involved. In conclusion, the case of XRP as the new money is clearer than ever, centered on its unmatched speed, incredibly low cost, and rapidly growing acceptance from established global finance names. If change comes, it may not look like a dramatic revolution, but rather a gradual and practical transition. When converting to dollars for a simple international payment may become less necessary, faster and more efficient routes will emerge. The old money is showing its age. The new money is here. Are you ready? Let me know your thoughts below and subscribe to WealthyWise for more insights.
We're now facing a world of many potential outcomes.
The inside story of an age of easy money.
Every financial function had failed, and we had to restore them.
Do you think it was a radical policy?
I most certainly did think it was a radical policy.
The Fed inject money into the economy. Fueled by recent government stimulus programs.
When the Fed changes to the primary engine of economic growth, it's supposed to be our democratic institutions that do that, not the central bank.
And an uncertain future.
In for American families.
It's not just that we're getting more calls, it's that the folks who are calling us are in greater distress.
Correspondent James Jacoby investigates.
How remote is the possibility that there could be much higher unemployment in the next couple of years?
I mean, I wouldn't say it's remote.
Now on Frontline.
It really is difficult to overstate how important this story is and how much it matters.
I don't know if I can safely say that we're at the bottom.